So we're talking about 17 ratio formulas that you must know before you're going to give your CBSE paper or your ISC paper. Okay. When
Yeah.
you are going to revise these ratios, these are the 17 ratios that you must know. When if you're watching my videos to revise the ratios, there is a slow version of it where I am explaining a little bit of concepts. There is a fast version of it where I am only discussing the way you memorize the ratios. Okay, this is my part 3 of the slow version. Okay, part 1 would contain your first 5 ratios, that is your current liquidity ratios, current ratio, quick ratio, debt to equity, proprietary, and debt to total assets. Okay, your part 2 contains most of your turnover ratios and interest coverage ratio. Now we are going to discuss the part 3, that is your profitability ratios. What
Yes.
does your profitability ratio include?
Gross
Your
profit ratio,
gross
net
profit,
profit
net
ratio.
profit, operating, and your return on investment ratios. What do you mean by gross profit?
Gross profit means the percentage of revenue that exceeds the cost of goods sold.
So your gross profit ratio, if it is markup, your gross profit is on costs. It helps you to calculate your gross profit. Okay.
Yeah.
So the formula for this profitability ratio, it is gross profit over revenue into 100.
Yeah.
Please note that all your profitability ratios, if the ratio has the name profit in it, okay, your
Yeah.
denominator will always be your revenue.
Revenue from operations.
Okay, your
Yeah.
denominator would always be your revenue. Now your net
Yes.
profit ratio. Net profit means profit after subtracting all your expenses. So after you subtract all your expenses, the last profit that is left with you is called the net profit ratio. That is your profit for the year. Okay.
Yes.
So profit for the year divided by your revenue into 100. Are you with me?
Yeah. Yes.
Operating profit ratio. What is operating profit? Here you have to recall your income statement. What is the format of your income statement?
Uh,
Sales minus cost of sales
Minus
gives you
cost of
gross
sales.
profit minus the other expenses gives you operating profit.
Yeah. Yeah.
So how do you
Eh,
get your operating profit ratio?
Operating profit ratio. Yeah. From income statement. See,
Operating profit divided by your revenue into 100.
revenue.
Please understand, any profit ratio would be divided by the revenue.
100. Yeah.
If you have the gross profit ratio, what will be the formula? Gross
Gross
profit
profit divided by
revenue
RFO
into 100.
multiplied by 100.
If you
Yeah.
have the net profit ratio, what would be the formula?
Net profit divided by revenue multiplied by 100.
If you have the operating profit, what would be the formula?
Operating profit divided by revenue multiplied by 100.
Operating profit divided by the revenue multiplied by 100. Okay, so
Yeah.
you have the gross profit, you have the net profit, you have the operating profit. You should know your operating expenses, your administrative expenses, and your selling and distribution expenses.
Yeah.
Are you with me? Now you have
Yes.
the next ratio, that is your operating ratio.
Yes.
How do you get your operating ratio?
This thing through income statement, right?
What is operating ratio?
Oh wait, no, that's operating ratio would be Not clear with
So
it.
your operating ratio is what? Your operating ratio is your cost of revenue from operation. That means your cost of
Yeah.
sales. In that,
Uh-huh.
you add your operating expenses, you minus your operating income.
Yeah.
Okay. So your cost of sales operating ratio will give you your operating expenses. What will it
Yes.
give you?
Operating expenses
Operating expenses. So your operating ratio would be your cost of sales plus operating
plus
expenses
operating
minus
expenses,
operating income
operating income,
divided by your revenue into
revenue,
100.
100.
Okay.
Yeah.
And your last ratio would be the return on capital
Turn
employed.
on
Return
investment.
on investment, and it is also called the ROCE, that is your return on capital employed. This is your ratio from 11 to 15. Okay.
Yeah.
What was your 11th ratio? Gross profit, net
Gross
profit,
profit, net profit,
operating profit,
operating profit, and then
operating ratio,
operating ratio, then return on investment
return on
or return on
investment,
capital
or the
employed.
return on capital employed.
Capital employed.
So your return on investment would be your net profit before interest and tax.
Yeah.
This is which
Net
profit?
profit.
This is nothing but
Uh,
your operating profit.
operating profit.
Operating profit, but from this, usually the learners forget to minus the preference dividend. So you will minus the preference dividend divided by capital employed. What is capital employed?
Capital employed is the
Capital employed is the money used in business,
oh yeah, yeah, yeah.
is the money that you use in the business. So when I'm talking about return on your investment, how much net profit you are getting. On
Yeah.
your investment, how much operating profit you are getting. Net
Yes.
profit minus before interest and tax, and you will also minus your preference dividend. What is capital employed? Capital employed is your money that you're using in business, or you would say this is your investment.
Yeah.
Okay. So what is the money that you're using in business?
Capital employed.
But what is it? What is the money that you're using in the business? What is your capital employed, or what is the money that you're using in business? It is your capital
Yeah.
plus your non-current liabilities.
Okay.
Okay. If you see and you make your balance sheet, you have your liabilities over here and you have your assets over here.
Yeah.
So capital plus non-current liabilities is something that is going to give you your capital employed.
Yeah.
Okay. If you have the total liabilities given to you, how would you arrive at capital employed?
So what?
If you have your total liabilities given to you, how would you arrive
Yeah.
at capital employed?
Capital
From your
employed.
total liabilities, you will minus your current liability. Suppose your total liability is 200, your current liability is 100. What would be your capital employed?
100.
Huh?
100. Yeah.
100. Yeah.
Yeah.
Okay. I give you example number two. Say your total assets is 300.
Yeah.
Your current liability is 100. What will be your capital employed?
Well, think again. It will be subtracted.
What will be subtracted?
200. Current liability and total asset.
What is your total liability now?
Wait, it's not. Is it current liability or total liability?
Darling, I have given you your total asset is 300. Current liability
Yeah.
is 100. What will be your capital employed?
Yeah. Okay. 300.
What is capital employed?
Capital employed is
Money used in
the
the
amount of money. Yeah.
money used in the business. That means the capital plus non-current liabilities.
No. Uh-huh.
Okay. Your total assets is 300. So what will be your total liability?
300 is,
300, because your total
yeah.
assets is always equal to your total liabilities.
Yeah, yeah.
From your total
Then
liabilities, if you minus your current liabilities, what will you get?
capital and non-current liability.
Yeah, so this would be
200.
200. So capital
Yep.
employed, the first formula is capital plus non-current liability. Your second formula is total liabilities minus the current liability.
Current
Your third
liability.
formula would be your total assets minus your current liability,
Current
because your
liability.
total liability is equal to your total assets. So with this, we did last 11 to 15th the formulas, which was the profitability ratios. Okay.
Yeah.
What are the formulas? Can you tell me?
Gross profit ratio, net profit ratio, operating ratio, operating profit ratio, and return on investment.
Gross profit ratio, any profitability ratio, what you're going to divide is
Yep.
always the revenue.
Yeah.
For gross profit, you will use gross profit.
Gross profit.
Net profit, you will use net
We'll use
profit.
net profit.
Operating profit, you're going to use.
Operating profit, use operating profit.
But
Yeah.
for operating ratio,
Yeah. It is.
you should have your operating expenses.
Yep.
So cost
Okay.
of sales for operating ratio, it would be what? For operating ratio, it would be cost of sales plus other income minus other expenses.
Yeah.
It is going to give you your operating expenses. Sorry,
Expenses.
I'm sorry. Plus operating expenses minus operating income.
Okay.
Cost of sales plus operating expenses minus operating income.
Operating
This is going
income.
to give you your operating cost. Okay.
Operating cost. Okay.
Operating ratio. So any profitability ratios, you're going to divide it by revenue. For gross profit, your numerator would be gross profit. For net profit, it will be net profit. For operating, it would be your operating expenses. That is cost of sales plus operating expenses minus operating income. For operating profit, you will
Yeah.
use your operating profit. And for return on capital employed, what will you do?
Return on investment.
Hmm?
Net profit.
Net
This.
profit before interest and tax minus
Net
preference
profit.
dividend over
Previous.
capital employed.
Yeah.
How do you get capital employed?
Capital employed. uh, This thing. Uh, Capital plus non-current liability.
Capital plus non-current liability. What is the other formula for capital employed?
I don't remember.
It is total liabilities minus current liability. What is the other formula for capital employed?
Total liability minus current liability. Then
What is the other formula for capital employed? The other formula for capital employed is your total assets minus your current liability.
current liabilities. Okay.
I'm
Okay.
giving you time. Now you are going to sit and write the last 5 ratios and the first 10 ratios.